All right, welcome to this chapter 16 snippet. We're going to do another cash flow statement. I've done one for, it was kind of an easier one. This one's a little more challenging. So I'm going to kind of show you this one. This will take us a little longer. I left these little pound sign thingies here just because I wasn't sure if people understood or knew how to get rid of those. Whenever you see that, all you got to do is just double click this little line there and it'll open them up. Just like that. It's a little trick I picked up. I probably got taught that. Actually, I just don't even know where I got it from. Either way, point is, if that ever happens to you, you can click on those. It'll widen it to where it'll allow you to see everything in that thing. You do want to be careful though, because if you have a really long sentence, like see this long sentence right here. If I were to do it on this one, it would open it up real bad. Oh, excuse me. Sorry. Sneezing there. Must be allergy season. All right. So let's look at this one. We have our comparative balance sheet. Okay. We have our income statement. That's what we need. We have some additional information here. So let's get started. Remember, if you're using Excel, you can beg, borrow, and steal. Not in real life, though. Please don't steal in real life. I'm not endorsing that thievery. Statement of cash flows. If you put cash flow statement 2, that's just fine. Either one is just fine. Remember Operation Iraqi Freedom, OIF. So our operating activities is our first one. So we're going to start off with cash flows from operating activities. And we start off with net income. We're going to reconcile net income. There's other words and things you can put in there to reconcile net income and do all that stuff, but I'm not going to. This is more, I'm more showing you this for functionality and getting it done than I am, showing you how to make it perfectly perfect. Oops. Move that there. Oh, look, those pound signs again. Let's do that. There we go. All right, so now let's reconcile this net income. We're going to start off here with depreciation expense. All right, and I will use cell referencing this time just for, hoots and giggles. So we have 54,000. So let's come over here to accumulated depreciation. Let's find out what our difference is over here. All right, so we're going to go this minus this. So we did have an increase in $54,000. So looks like that is what is going to be good. So let's go ahead and hit our X here. I just quickly scanned the additional information to make sure there wasn't any sale of equipment. I mean, there is the possible chance that out of mere coincidence, the accumulated depreciation change and the depreciation expense is the same. And you have had some some accumulated depreciation leave, and I've never seen it happen. I'm just saying that there's probably a possibility out there, especially when you're using different funky depreciation methods. All right, we're going to look for some gains and losses. I'm going to just scan our income statement, which is where we would see any of those gains and losses, and I don't see any there. I don't see anything indicated in my additional information. So I can safely presume that gains and losses aren't going to be included here. If there were gains and losses, we would decrease net income for any gains, and we would increase net income for any losses. But since there aren't none, let's go ahead and move on to our changes in our current liabilities and assets. So let's start off with assets. What happened to accounts receivable? It looks like it went up. So whenever accounts receivable or a current asset increases, we're going to decrease that amount in the change to net income. So we're going to say increase in accounts receivable, and that will be a decrease to net income. Actually, I shouldn't do that because I'm going to put an X there. Better. Okay. So see, I'm going to do that so that I know I've dealt with it. Okay. And so we saw an increase in inventory for 75,000. Oops, I forgot the negative sign. We are going to decrease that. All right, and that concludes our current assets that are not cash. All right. Let's go down here to accounts payable, and accounts payable increased. And let's just do salaries payable. It looks like it also increased. So we're going to increase net income based on those. Increase in accounts payable, 16,000. Increase in salaries payable, 3,000. Okay, so that concludes our current assets and liabilities. Whoops, let's not do that. total cash flows from operating activities. We could put net cash flows from operating activities. In fact, that's probably more appropriate. Let's put net. And you know what? Let's widen this a bit just to make it to where I can put this. See, it's just formatting issue right here. Just trying to make it look good. No big deal. All right, so we have $122,000 cash from operating activities. Initially, we're going to look at that and see that that's good. Okay, that's a good thing. We're able to cover all of our current liabilities with the cash that we have, so feeling pretty good about this. We've X'd out everything over here. Now we're going to do OI, Operation Iraqi Freedom. I is investing, and I'm just going to save me and you some time. Cash flow from investing activities. Remember, we're investing in ourselves. So purchased equipment for $36,000. Just a cursory review looks like that's what it was. So we're going to go cash paid for equipment, or you could put purchased equipment. You really, it's more a flavor. You really don't need to get too hung up on it, on how it's worded. As long as it doesn't mislead the investors, we should be fine. And it looks like that's it. Okay. I don't see any long-term liabilities on this one either. So let's smash that. Okay. And let's make it look pretty. I forgot to do that here. And I'm going to take this one. I'm doing it a little different than the other one, just to show you that, right, guys, it really doesn't matter. I mean, the format like this, whether you indent it or not, it's just as long as you have the appropriate headers and everything like that, you're going to be fine. All right, so our cash paid. This was paid, so we need to show that it was an outflow. So let's do that. And then, so we purchased equipment here, so we're good with that one. Issued common shares and declared and paid an $89,000 cash dividend. Okay, so we're going to deal with these now. So we're going to go financing activities. And I'm just going to spitball this because I'm going to willing to bet. All right, investing, and we're going to go financing. Financing. Okay, I hate my phone. Okay, sorry about that. We're doing financing activity. So let's come down here and look at our common shares. Our common shares are $2 par value. All right. Now, if you didn't have the information in the additional information, we could still figure this out. It says we issued 12,000 shares of common stock for $5 cash per share. $2 par value common stock. If we divide 24,000 by 2, that equates or accounts for all the common shares. But we received $24,000 for the issuance of common stock. And we're going to go $24,000 with that one. Now that I think about it, actually, because we're going to have to account for the additional paid in capital as well, let's do that. So we have a total of $60,000 for the stock issuance. So I think that would actually be more appropriate to put here. The reason is we issued it for $5 cash per share. And even though it increased both of these accounts, we don't need to separate the both of them. We can combine them for simplicity. So I can move this up. Okay, then the last one's our retained earnings. Remember what our retained earnings is. All right, let's go ahead and just do our quick little T account over here. All right, so our retained earnings balance initially was $75,000. We increase it with net income, and then we decrease it with dividends. And so what is our ending balance? There it is, ending balance. Okay, so we know that we have dealt with this net income. Oops, not that. I want just an X. And so we need to deal with the $89,000 in the cash dividends. Paid cash dividends, 89,000. And that was a decline. All right. So there we go. There's our net cash flow from financing activities. Change in cash, cash beginning balance, cash ending balance. Let's go ahead and come over here and see if we get this right. There's that. Oh, there's those pound signs again. I'm going to add up these three numbers. We got a change in cash of an increase in $57,000. Our beginning cash was $107,000. Fingers crossed. Look at that. And that's how we want to do that. Let me go ahead and put the X's here to account for everything. I guess I don't need to because I know I got it. But that's, again, another example of the cash flow statement and how to solve it. Just so that you guys know we were dealing with the retained earnings account right there. All right, you guys, good luck. Have a good one, and we'll see you guys in other videos.